All right, welcome to today's live stream. It is Monday, February 24th, 2025. Oh, how fast February is going and how slow compared to January of this year. Oh my gosh. Anyway, welcome to all of our new subscribers. We're super happy you're here. Grateful for you. You guys and gals are awesome. We appreciate your emails. We appreciate your postings in our stock forum. Keep reaching out to us and helping us make the best product we can absolutely offer you. We take your suggestions to heart and we go through and look at what we can implement right away versus what needs to be tabled for later. But we read all of your emails, and I know many of you have said, grateful for the response and for such the quick reply. So let's dive in. Lots to cover today. Boy, what a difference a week makes, or 2 weeks, or even the sentiment in the market. We've got the Dow. Let me move some screens around here. We've got the NASDAQ off slightly, the Dow up slightly, crude oil roughly unchanged, silver down slightly. On the surface, it looks like things are kind of moving sideways, but internally, what's really happening with the technology stocks, AI especially, just getting absolutely whacked right now. And, it's had such a huge run up, right? Palantir, Big Bear AI, and many more companies, Meta. I mean, I can just point to so many stocks right now that are in the throes of getting just absolutely hammered right now. And all I want to say is relax through this process. It's all going to be fine. This is your buying opportunity. This is the time when you get to buy more shares at a cheaper price and sit with the stock. Like, you certainly don't want to bail on a company, and I'll go over a couple specifically in a moment, but you really want to use this opportunity to add more shares to your portfolio, to not get all freaked out with the stocks being on sale. I've always said, stocks are the only investment class where people freak out when the prices drop. If we were talking like rolls of paper towel, if paper towel was on sale 50%, you'd be running to that store, grocery store or a box store, and stocking up on paper towels, right? So consider applying some of that knowledge and desire to stocks when they go down. It is so fascinating, right? When stocks go up and up and up, FOMO kicks in, and oftentimes buyers will buy stocks at a higher price. But when they drop, this whole emotional gut-wrenching thing happens where it's very difficult to buy stocks on sale. And I'm going to encourage you to make the investment, especially in AI companies. That is the future. The future is here and now. It's only going to continue to expand. And again, I'm going to talk about two specifically in a moment. But weekly earnings, let's dive in. Wednesday, NVIDIA after the close. Okay, this is a big deal. Most of the market, especially technology, just hinges on NVIDIA's numbers. It's just incredible the effect that it has. So we've got NVIDIA, we've got Salesforce, we've got C3.ai. All of these are real, just big players, and it's going to be fascinating to watch these earnings. And Thursday after the close, you've got SoundHound, another AI company that has really been under pressure lately. And I think at this point at like $9 a share, a fantastic buy. Option contracts are super rich on SoundHound this week. So that's an indicator too that good things are forecasted for the company in terms of earnings. Option contracts, really big indicators with what the market's expecting for earnings. And, I've talked about this a lot. When you take a position in a stock and sell a covered call on that particular stock, you have a recipe for success and allowing you to bring in extra income. So for those who are looking for like another income stream, let your stocks create that for you. And you do it by selling covered calls on your particular stocks. Now you have to have 100 shares of stock to sell a covered call, but just let me give you an example here with that's our old portal. Let me bring up our new portal. Okay, so like with SoundHound, for example, let's look at the stock. So if we look at the current share price, and we're looking at, okay, so $9.48 a share, right? So for you to buy 100 shares of SoundHound, it's going to run you $948, less than $1,000. But here's the magic, all right? If you go to Options View and you look up this Friday expiry, February 28 calls, let's see, the 12s are interesting, but you've got like the 11s at 44, so you're looking at $44 to receive. Now last week when the stock was up a little bit more, these premiums were way better, and that generally is what happens when a stock goes up. The call premiums are richer, and we were selling covered calls on SoundHound last week at, let me just double check my numbers, but it was at the 14s at 52 cents. The 14s right here at 52 cents. Now they're at 13 cents. So for every $1,000 that you had invested, you received $52 back in that covered call. And, if the stock gets called at 14, well, no problem, right? You'd be thrilled because that is a, let's see, more than a 50% return in 1 week on your money. Now, that is just one way to look at these covered calls to see, what can you get from it. But, if you're buying the stock here at $9.48, heck, even looking at the 10s at 75 cents, that gets you $75 back right away, regardless of what the stock does or doesn't do. You still keep that option premium. And for a $75 initial return on that $1,000 investment, not bad, right? Like decent. 7.5% roughly. So if you're looking for, how do I boost returns in my portfolio, you do it this way. Buy the underlying stock, sell the covered call. Whenever you sell something, you receive money back. Makes sense, right? All right, let's keep going. Big Bear was the topic for today. This was my number one pick for 2025. It is already up in the course of a year, 212% in 1 year. The last month up 47.5%. Like it's literally crushing it. But nevertheless, it's pulled back, and it doesn't feel good when a stock pulls back. I actually get a little excited when it pulls back because I go, okay, I can add more shares at a better price. And that's really what we're looking to do. So all of the AI stocks are lumped in, and all of them have taken it on the chin with this announcement of government reduced spending. But here's what you got to know about a company like Big Bear. Their technology is all around essentially two things: border protection and facial recognition. So there is not, from what I can tell, there is not going to be a reduction in spending in those two things. If anything, they're going to get more and more customers. Like here, look, Just 4 days ago, point of sale payment leader SoftPoint selects Big Bear for facial recognition matching. So more and more companies are going to follow suit because that's where we're going, right? This heavily technocracy system that we're finding ourselves in, where facial recognition, this can be deployed in every single airport and at every single hospital door. There's so many applications for facial recognition. It just is beyond understanding, comprehension. And unfortunately, that seems to be the direction that we're going in, a heavily surveilled economy in society where, we're going to be tracked and traced all the time, walking down the street or walking in a mall or going to an airport, whatever. And they've got the technology to do that. So the results come out, earnings March 6th, right around the corner. I think they're going to be fantastic. And I think we're going to start to see, reporting fourth quarter, full year 2024. Y'all, I don't think you can go wrong with buying shares at this particular price, $6.11 currently as of this recording. That is my opinion. Has it been higher? Absolutely. I believe it hit, here we go, 1036 recently. But I don't know if that's entirely accurate. That's the closing price. Intraday, I believe it was last week, early last week or the week before that, it hit 11.30. It was definitely in the $11 range because I kept thinking, wow, my price target for 2025 was 10 and it's already hit that. So I have since increased my price target for this stock to $20 to $30. Let's call it 25, split the difference in the middle there. And so from 6 to 25, I think there's tremendous opportunity. Even if it doesn't hit that this year, then we've got next year. So if you position yourself well, buying the shares, tuck them away, forget you even own the stock. This is one of those Palantir moments. Did y'all buy Palantir last year? That was my number one pick for this year, or for last year, excuse me, for 2024. And it returned over 300%. And it's taken it on the chin now too. Look at that, down about 10%. Right now, $91 a share. I just think we've got some real opportunity here with some of these stocks that are selling off. Now, Palantir started their business all on government contracts. Like that was their number one customer. And last year, 2023, 2024, they reduced the government contract. So those were already pulled back. Other industries have hired them. Healthcare is the number one industry that I can think of right now that has purchased their information. And, I just think, I think this decline is overdone. I really do. I think there's tremendous opportunity in these stocks. If you buy it, sell the covered calls. If the stock drops, just keep selling those covered calls. That is how you continue to make money owning stocks as you hold them. Next thing I want to talk about is Warren Buffett. Warren Buffett, specifically his cash position, close to $325 billion. Now, it hasn't been this high since 2008. Now, you have to understand, he is a value investor. So a value investor evaluates the market and the economy and says, where are the stocks that are of good value here? And if he can't find any stocks of good value, then he's going to hold cash. So interesting, very, very interesting situation here. This is a record, $325 billion. It's more than the combined cash held by the 5 largest public companies by market cap. It's a lot of money to deploy. And it just seems like, he's he is gearing up toward his successor stepping in to take his place. This year could very well be the year that he retires. And when there is a price, the average PE ratio on the market is 30.2. It's gone up 45% since May of 2022. So that means the overall price to earnings ratio with all the stocks that trade on the S&P 500 is at 30.2, a big increase in the last couple years. And, part of that, I think, is earnings continue to go up with these companies. And we've had a few things that have helped corporate earnings go higher, inflation, of course, higher prices. And it just seems to me that this nervousness in the market is actually helping drive the markets higher, because if you've ever heard the saying, the markets can climb a wall of worry. So the markets can keep going up when there's concern around levels and indicators. The market caves once everyone says, yay, the market's just going to keep going higher and higher and higher. And that's really not happening right now. There's a lot of concern around the markets, and I actually think that's what's driving it higher. So a couple things to be aware of. There's a lot of cash to deploy that's sitting on the sidelines. Warren Buffett is not just the only investor that's sitting in cash. There's cash ready to go. So all the market is waiting for some type of indicator of when to buy. And I think stocks like these AI companies, technology companies, are giving off some indication that they are oversold in the near term. We're not quite there yet, because if you look at the, how do you determine that? You look at the money flow index, and it's still in the low 70s. We really want to see that pull back to, the 40, 50 range in order to signal and indicate the selling pressure is over and it's time to buy. So we've still got a little more selling pressure here. You may be able to pick up Big Bear, $5.50, $5.30 a share. If that's the case, I would say do it. I don't think you can go wrong with a company at that price. Another stock I want to talk about is Supermicro. A lot of information on this stock, a lot of news coming out. It has hit a low recently. The recent low was November 15th of last year. And then it's just made, and then there's another dip here, early February at 26. Look what it's done in the month of February though, 26 to 53. Big move. All of this is contingent on them posting their 10K with the SEC to stay tradable on an exchange so they don't get delisted, and that is due tomorrow, the 25th. So I don't think there's any concern around this company posting that report. I think not only are they going to post the report, they're also going to indicate who their new CFO is. They had to replace the CFO. I think they've already identified a new one. I think they're going to disclose that. And I think from here, the stock could make a really nice move up. So we're sitting again with another company here that is potentially a really good buy. 71.67 is the MFI. Still could be some selling pressure here, but this intraday high was 66. I watched it hit last Wednesday, $66 a share, and then there was a flash crash the last 30 minutes of trading. This is how controlled and manipulated the markets are. If you're an investor and if you're watching this on a regular basis, you can feel it, you can see it happen. And that's exactly what happened the last 30 minutes of trading last Wednesday. How do I know this? Because it's right when we lost power. I was on a Zoom conference call and lights went out, computer went down. I put our modem on our backup generator, fired that up, and then looked at this stock, and it went from 66 to 57 like that, literally in a flash. I call that a flash crash, a manipulated flash crash, because the shorts, here's the thing, this stock is shorted. Look at that, 15.65% of all shares outstanding are shorted. So it is manipulated like you just have never seen before. And it was actually really disheartening to me as an investor to, hey, I know the market's rigged. I've always said that the market is rigged to go up. But as you see these shorts, it's funny, the shorts losing their shirts, right? As the stocks go up and up and up, that's when the shorts are losing money. And right then, this article came out, which was infuriating to me, but was the reason why we saw what we did. And that was something like shorts were losing, where is that? $73 billion. That was let me see, maybe it's on the next page here. Lots of news on this company, as you can see. I don't see the headline here, but literally it was all around the shorts losing $73 billion so far this year. And I'm sure they picked up the phone, called a market maker or two and said, hey, reverse course, we've got to buy some shares back. I don't know if they went ahead and bought shares back, but on that particular trading day, 200 million shares traded hands on that day. And so that is not retail at all. That is institutional investors buying and selling as well. So anyway, I get pretty fired up over stuff like this because I can't stand market manipulation, and I can't stand it in a way that it only benefits one particular investor, and that is the shorts, and they make money when stocks go down, not up. The rest of the market makes money when stocks go up because we hold it long. So incredibly, this is, to this point, quite frankly, it's criminal activity level. But what do? There's nothing we can do. It's unfortunate. But anyway, that's where we stand with that. So overblown dip. I think the stock should, after them reporting that, yes, they are in line with the reporting that they need to remain on the particular exchange, and everything is good. I think this could go to the next level of beyond 66, if not 70, potentially to $80 a share. So that's what I've got for you today. Hope you found this helpful. Have a fantastic trading week. Do your best to buy the dips. There is one more thing I want to show you. So another way to buy some of these, participate in the growth in some of these stocks, is to buy options that are called leaps. Leap is a long-term option contract. And if you look at the leaps so what you do is you just click on the expiry dates and you go as far out as you can. So the January 15th is as far as I can go. That gives you, let's see, 10 months of 2025, all of 2026, and just the very beginning of 2027. But I started buying these 7 calls because I had to ask myself, will Big Bear be at $7 or higher in this particular time frame? So we've got 12, 20, 23 months. Will it be at that level? And if you think so, then you spend $2.90 per contract. That's $290 a contract. And so essentially your break-even point is 7 plus $2.90. So the real question is, will Big Bear be higher than $9.90 in 24 months? That's the question, right? So if you think so, then you can use this tool for leverage, as long as your account is set up to trade options, you can buy these 7 leaps for $2.90. I think it's a no-brainer to be able to participate in the movement of the price of the stock. One more thing I want to talk about, because I noticed we've now ticked to a 2-star ranking. That is a sell ranking in our system. I don't think this is the time to bail on this stock. I think this is the time to actually watch it and or set a buy limit order in for, let's say $5.50 or $5.30 or $5, whatever your comfort level is. I think it's really prudent to start buying into these dips, because this is what we are seeing. On the way up, we saw higher highs, and up until here, we're seeing higher lows. Very, very critical with the stock price. So all we need to see this next drop is above this higher low of $4.12. It needs to bottom out higher than that. Then we've got a stock that's made higher lows and higher highs, which is a terrific time to buy. There, that almost rhymed. So it is through the short-term averages. We've got red above green, not the best scenario. We know it's going lower. We've got still an MFI that's relatively high, but the SMA 50 is at $4.81. That is providing support for the stock. So we've got intermediate support. We've got long-term, because the SMA 200 is at 240. And, I think it's going to just keep bouncing off those. If it does, make sure you're a buyer at that level and hold on for the ride. Have a great week, everyone. Thanks for tuning in. Bye for now.